not on Tuesday, on Monday that I want to put some emphasis on market structure, and that's exactly what I'm going to repeat right now. I need to repeat something to do with market structure so that we see what we can do so that you get more detailed understanding on the same. And then I also need you to keep practicing on the same so that you won't forget, because actually this is the basis of almost everything when it comes to trading forex. All right, with that said, I'm going to just begin by stating that when it comes to market structure, we have like, I know you watched the video that I shared, and we have the basic understanding on how the market moves. And I spent some time explaining that, and I said that market moves in that we always have an impulse, a correction, an impulse, a correction, then an impulse. That's basically for a market that is in an uptrend. But when it comes to downtrend, the market will give an impulse, a correction, an impulse, then correction, then an impulse. So importantly to note is that the correction always goes against the overall trend. So the thing is not cramming, the thing is understanding what the correction does. Because you can see, in this case, it's like going to the down, but in this case, the correction is going up. Okay, so it's important for you to notice the difference between a correction and impulse. The other thing that I need to mention is that when it comes to market structure, we have the external. It's also called the swing structure. So when you hear me, they basically mean the same. They basically mean the same. So this is the external swing high. This is the external swing low. There is another term that I want to introduce here. We have swing strong and swing weak. Swing strong, swing weak. In this case here, this is the swing weak. This here, this is what we call the swing weak. My network is a bit low. I don't know. Yes, this is what we call the swing weak. No, sorry. This is the swing strong. This is the swing weak. Now here is where the difference comes. I've seen that we have the swing weak and swing strong. Just like the term means, I mean, the term implies, for the weak structures are always taken out. So this is the swing high that is weak. And that's why when the market comes to the swing weak, it always gives us what we call the break structure. All right. For the swing strong here, sorry, for the swing strong here, which is this level here, it is always protected. It means like uh, if we get a correction, it won't go beyond that zone because it's a strong swing. All right. So this correction, there is no way it's going to break this swing strong here. Yes, it can come to the same level as the previous one, but it's not gonna break it. Why? Because it's a strong swing. It is protected. Okay. But for the weak one, this one, it's like you are fighting. Let's give an example of someone who's weak. Maybe someone is how do I put it? Like, let's talk of someone who is slim and someone who is thick. So just have that analogy. So this one here is someone who's slim like Cotton, and this one here is someone who is thick like me. So for Cotton, it is easy to take him out compared to me. So that's the case. Yes, so this is the weak one, this is the strong one. It can protect itself. It can only be defeated in rare cases, and when it is defeated, that's the rare case where we call it change of character. Okay, so when it comes to labeling, there is no harm when you label this as swing strong. That's why I have these things saved. So you can label this as swing strong. Yeah, to mean that we don't expect the market to take out that zone. And if I label these levels swing weak, it means like this is where we are most likely. Let me delete this side here so that it means that this is the level where we are most likely to get a break of structure, the swing weak. So this zone is more likely to be taken out. All right. So it's important for you to have that understanding about the swing weak and swing strong, okay? So that you know always the market will give you a break of structure to the side where we have the swing weak because the zone is weak, okay? And another way to differentiate between the two is that the market, the reason we call this thing strong is because this zone has given us a break of structure, okay? The zone has given us a break of structure. So any zone that has given you a break of structure, any law that has given you a break of that is a good joy. I mean, a good area to do what? A good area that is protected to take a trade. All right. Yes. So assuming I've found a market that is on this sell, it means technically speaking, we don't expect this sell to go beyond the swing strong because the zone is protected. Okay, so in this case, you'll start looking for possible zones, for possible demand zones where you're going to take buys with targets being the swing week. Because yes, of course, the market will not take out the swing week. Okay, now with that said, now these swings are what we call the external structures. These swings, the swing points, the swing highs and the swing lows are what we call the the the, the external structures. And then now that tells you in between we have structures that together joint they form this line. It is very rare for you to find a market that is moving this right kind of line. In between you'll find market moving with now the internal structures, and I want to explain to you how we use these internal structures, how we like once we get to understand the market structure, the swing structure. Now basically what I'm saying is uh the we take entries on lower time frame. Okay, we take entries on lower time frame. All right, now with that said, number one step when it comes to analyzing, steps to, in fact, you can note them down. Steps to taking an entry in markets. So number one, you have to understand the overall market structure. When it comes to understanding the overall market structure, what it means is understand the language of the market in terms of market structure in the higher time frame. Okay, so it's important for you to go to a higher time frame, 4 hours daily time frame, get to understand is this market in a bearish or a bullish move. Okay, that's step one. Step two, once you've established that the market, for instance, in this case here, the market is in a bullish move. And the other step is for you to understand, is this market in a correction phase, or it is in a bullish, correction, or it is in an impulse. I mean, like, you have to know, yes, the market is bullish. Are we currently on this level, a correction, so that I can know now when I take this entry, I'm trading against the mark, the overall structure, and this is the target that I'm targeting. Because let's assume, like, the market is at this phase and you are targeting here. It's impossible, because yes, it's a correction, but we don't expect this correction to give us a break of structure here. So it's important for you to understand at which phase the market is. Okay, now, for instance, once you have established, like, the market is on, let's say, for example, this is a bullish move, and you have established the market is at this level. That is, let's say you are in a 4 hours time frame. The next step that you should do is go to a lower time frame and wait for a change of character in the lower time frame for market to realign with the overall market structure. I'm going to explain that statement now. And that statement forms the basis of what you're going to learn. So now, considering that this market, it's buying, and we have seen these are the swing structures, and in between, of course, you'll find the internal structures looking like this. Okay, market will be having this internal structure now. Since this market is buying, of course, the structures will be like this. So before this market turns at this level, it will signal that it is shifting from bullish to bearish. Like, this impulse is over, we are getting to a correction. And the easiest way and the quickest way to establish that this market is going to shift from bullish to bearish, but keeping in mind overall it's just a correction. It's not that overall the market is shifting. It will give you a signal in 15 minutes by giving you a 15-minute internal. Please make sure that you understand that internal change of character, like this. So, like, internally tumepata this change of character. So when you shift to 15 minutes, you'll get this signal, and that will tell you, now, bro, check for a sell, because first you have established that this market is bullish and you have got into a correction. So now this market is selling, and it's gonna be selling for some time. So look for 15-minute change of character, because if you wait for a higher time frame change of character, you will take centuries before you get an entry. Okay, so you have to check for lower time frame, preferably 15 minutes. Okay, so you're moving from 4 hours, 1 hour to 15 minutes, just for you to check for internal change of character, so that you'll be in a position to get an entry. Now, how do you establish that this correction is over? It's still in 15 minutes. You will get market do something like this, then a shift like this, lower time frame. That it gives you the earliest signal that this market is shifting. So now when you go to 15 minutes, you will see, this correction is over. Now we are back to the impulse. So take a buy, then it continues like this. So the first target should be around this zone, because this is where the market must come. Then it will keep buying until it gives you another change of character to establish that we are starting another correction. So that's how you use the internal structures in the market. So it will always first give you a signal internally here. You see here, change of character. Here, change of character, internal. Okay? So if you wait for 4 hours, change of character, you're going to wait for so long. So we use the basic of the external structure basically first to understand the direction of the market structure. then establish based on a higher time frame which phase are we in. Are we in a correction, or are we in an are we in a correction, or are we just in impasse? So with that said, let me just give two examples and then we call it a day, so that you're going to rewatch the video. So for the other video, just ignore everything said about London session and New York session. Those are not important. The most important thing that I wanted you to understand is how do you establish the market structure. Okay, now let's take a look at this market here. This GBP USD, and I'm targeting now. Let's take an example of this. There is a trade that I shared with my team today, so that we just apply what we've learned. Okay. So from that, the external structures looks like this. This is the lower low. This is the no higher low, higher high, higher low, higher high, higher low. We have a higher high here, higher low. We can take this as one actually, like this. Okay. All right. At the same time, you can take this and this, but I'll teach you how to use this kind of entries. I'll teach you once we get some experience. So for now, let's take this as one. Then we have higher low, then higher high. So are we good? So we have established that this market is bullish. However, something happened here. We got a change of character. And it's how we got a change of character around this level. So now the market started giving us something like this. So once you get something like this, you know that now currently the market has shifted from being bullish, it's now bearish. That's step number one. So we are bearish. That's step number one. We are bearish. Okay. Now number two. Now remember that now the focus has shifted to this zone to here. This is the impulse, correction, and impulse. So we have been in a correction. These are corrections. So now we can label the swing structures. So we can label the swing structures. So now this becomes the swing strong. Why am I calling this a swing strong? The reason I'm calling this swing strong is because it is that level, it is this high that has given us this break of structure. Okay? This break of structure came from this point. This is the swing week. Why? Because let me label it. This is swing week. Now, the market is in a correction. Please establish that. So assuming we wanted to take advantage of this correction, the first time after the market imeshuka hivi, this is an impulse, this is a correction. Assuming we wanted to take advantage of this correction, this bar here, then one thing that we should have done is, after you've realized the market is still selling like this, let's say you found it here, it's selling. So just shift to 15 minutes time frame. Awesome. So shift to 15-minute time frame, wait for any time you see what we call a change of character. So we are in 15-minute time frame. The internals look like this. Market quick sell like this. So I'm just going to focus on this last part where we got change of character. So like this is the lower low, lower high, lower low, lower high, then lower low. Then we got what? A change of character. So 15 minutes time frame has signaled us that the impulse has ended. The impulse has ended. We are getting to a correction. Okay. So remember, we are using the internal structures at this point. We only use the external structures to know the phase at which the market is. Because remember, if you went to 15 minutes time frame direct, you wouldn't know that these are correction. You'll think, let me show you. You'll just think that this market is just buying in a panda, Okay. Now, after that, now you start looking for a buy. See, you will realize all through kutoka hapa, we only having break of structures. We don't have a change of character. Sasa hii ni yote hivi. Because this is where we have the break of structure. So you realize there is nowhere we are having what? A change of character. These markets just buy. Now, I'm going to take you back to 4 hours time frame, kiasi, so that I show you something. Now, we have said that from the previous statement that I made, like the swing strong is always respected. So at this point, we do not expect the market to go beyond this level, beyond this point. This is the swing strong. This is the swing lower high. The swing lower high. Sinisa. So that's why I've said now we have 2 types of traders. We have the conservative and we have the aggressive. Those are 2 types of traders. For the aggressive traders, they will not wait let me start with the conservative. For the conservative trader, will wait for market to give us a 15 minutes change of character. So they will shift to 15 minute time frame and wait for market to give us a change of character. Okay, so look at this and wait for market to break this level, because this is the level that gave us the last. It's like this. So this is the level that gave us the last break of structure here. So they will wait for market to break here, we get change of character, then now take an entry for a sale. For aggressive traders, they don't have to wait. Reason being, based on our rules, we know that the market cannot take out this swing strong. Okay, so they will just enter the trade automatically. So they will just enter the trade automatically. So we have advantage between the two. For conservative trader, they have to wait for a confirmation. They wait for a confirmation to show that yes, indeed the market is shifting direction. They have to wait for that confirmation. However, the problem is they might miss some entries in that while waiting for market to give us a change of character. Remember, sasa utaingililia huku chini kidogo juu you've waited for that change of character. So you're going to miss some pips of profit. However, for aggressive trader has advantage, because assuming now this market decides to give us a change of character, that's a loss. Okay, so we have both sides, the advantage and the disadvantage side. So that's how we use the internal structures. So this is basically the external structure that tells you these are bullish move, these are sell, these are bullish. Also tells you that this was a correction. We anticipate the market to do something like what? To sell, correct, and continue selling like that. Okay, so we expect the market to keep doing something like this. And if you guys can remember, there is a setup that I give for this linear daily time frame. I told you this market is going to sell. Remember, if you can remember very well, when we are starting, ilikuwa naonyesha hapa. I was using this setup to show you this is an impulse, correction, impulse, correction, impulse. Then I told you now it's going to sell. I drew for you something like this. Sorry, next. I drew for you something like this. Okay, so the overall structure of a daily time frame, we are actually still in a correction here. Correction, but since we say the market repeats itself, so it's like we are in a correction within a correction. We have correction within a correction, impulse within a correction. I don't want to use these terms because they might confuse you, but with time you're going to learn. Like you can get, for instance, let me just explain kidogo, but it shouldn't correct. I mean, it shouldn't. They shouldn't confuse you. For instance, now let's look at this market. This wave. You see, these are impulse, right? But inside the impulse, we have corrections. For example, inside, when you look at these internal structures for this impulse, you find that we have an impulse, a correction. The correction is within an impulse. You get it? We have an impulse that is within an impulse, this one here. Then we get a correction inside an impulse. Impulse, correction inside an impulse. So hii yote ni impulse, but inside it we have corrections and impulses that make the entire impulse. Okay, so that's the same thing that is happening here, whereby in this case here, remember overall we are in a correction, hii yote ni correction, but when you go to 4 hours time frame, yes, we have shifted to bearish. We had this correction, which is within a correction. So we are waiting for an impulse. Okay. Yes, that's why you need to get a clear understanding that we have internal structures and we have the external structures. And I said, when it comes to external and internal, I mean, when it comes to external structures, we also refer them to as swing structures. Okay, I know that has confused you a little bit, but trust you me not, if you watch that video as many times as possible and you practice, you're going to get a clarity on what I've said. Okay, now it's time for questions. I'm also going to repeat the same tomorrow so that we get a clear understanding, and then I introduce a concept on for because for instance, there is a way, um how do you know this correction is going to come up to this level? How do you know this correction is going to come up to this? I just want to introduce you to a concept that helps you know the whether we're going to get a deep correction, because if you've realized kuna zile corrections zinaenda sana. For example, this is an impulse correction imeenda but ijafika huku. This is an impulse correction imefika huku. So how do you know the difference? How do you establish? How do you know that correction itafika hapa ama itafika hapa? That's a concept that I'm going to touch on tomorrow. Okay. Yes. So I'm welcoming your questions, please. Yes. Unaweza inua mkono kama uko na swali. Kama hujui kuinua mkono, you can just go direct to kuongea. Na kama mko sawa, mseme thumbs up. Usingoje sana. Okay. There being no question, I'll task you with rewatching the video, the one that we have recorded, and me explaining the swing and external structures. Tomorrow we are going to do at least 3 examples so that you get a clarity on what I've said. Okay, so otherwise, thank you so much guys for joining. I was impressed that yesterday you guys, when I wasn't available, you had sessions. So I will really appreciate that if you keep that spirit, because it's important that we keep practicing and practicing what we learn. This thing for sure, it's going to break you. It will require much of your sacrifice for you to enjoy the fruits. So let's keep practicing. Let's keep doing what is necessary. Okay. Otherwise, have a good night. See you tomorrow. Bye bye.